So now the session, third session is interplay between RERA and IBC. We have CA Nipun Singhvi, and welcome you, sir. I request Secretary Manjunath M. Hallur to present a follow bouquet to the speaker. It's my privilege to introduce the speaker. He's a fellow chartered accountant, company secretary, LLB, LLM, certified forensic, IFRS, bank auditor, qualified independent director, executive program and merger and acquisition, qualified insolvency examination, IBB, and is a practicing advocate. I have been a member of World Bank Insolvency Group on train the trainers jointly with IBBI and IPA of all the three institutes, ICAI, ICSI, and ICMAI. Research paper selected by IIM Ahmedabad and IBBI published on sale of company under liquidation as going concern. He has been appointed by NCLT for convening meetings as chairman in disputed cases of operation and mismanagement. He is an expert member and been part of various committees of ICAI on corporate laws, bank audit, accounting standards, and he is a chairman of corporate law committee, GIPA or avoidance transaction committee, ICAI, IPAI. And he has published books on which is published by WAIC reference manual on insolvency laws, guide to IBC by Bloomsburg. And with this brief introduction, I hand over the session to the speaker. Welcome to you, sir.
Very good afternoon to everyone. There are always two sessions which are very difficult. One pre-lunch, one post-lunch. So I am having the difficult task of post-lunch. And I will try my level best to keep you awake. Because the food was good. Temperature is also nice now. So I suppose that we all will not sleep, including me. So Vinay Bhai has already explained in detail RERA. Suhail Bhai has threadbare analysis of all the legal provisions. And I must tell you that this law, again, which we are going to discuss and which is my topic and very close to my heart because I was part of this drafting committee of this law. In 2015, we never knew that this law will become technically passed by Parliament. Because in 2015, when this bankruptcy law reforms committee gave their report, there was huge hue and cry. And therefore, it was sent to JPC, Joint Parliamentary Committee. And I had the opportunity to assist them. And I tell you, the biggest challenge was, and one of the biggest challenge was that if you want to do insolvency work, and probably I hope all of you are aware about insolvency professional. How many of you, anybody has tried to clear IP exam? Okay, 1, 2. Okay, you are already IP. Okay, great. Sir, you tried but not done. Okay. Anybody else? Cleared or cleared? So great. So 2 are aware about IBC. And I hope you are doing some assignments also. And therefore, probably what I would be talking may be a little bit known to you. But for others who are not aware about IBC, let me tell you, this is one law which came parallel to RERA. But I would say RERA is only a small part of one industry, which is real estate. IBC has impacted corporate world as a whole. And even if you have not known, you must have heard about Go First, the recent one. So it's better to take a company into IBC rather than to run a loss-making business. And whenever I told that you might have money, but your books may be on loss. So probably in such a situation, and I will be discussing such cases where it is viable to take a company into IBC. So IBC is basically insolvency and bankruptcy code, and RERA is an act. So I would also give you some idea, if both of them have a conflict, what will happen. And today, I think the theme of today's program is more or less on what are the remedies available to a person who buys a property. And to simply put, it could be a home buyer, it could be a business property buyer. What could be the possible remedies? And probably in RERA law, it's, I would say, 90% in the favor of the buyers. Probably 10% maybe in the favor of builders also. But more or less it is like this. I tell you very interestingly, when we used to go to labor court, appear before labor court few years back, in labor court, when we used to argue something against the labor, court used to say, we are going to award compensation. It's a labor court, so it is for the benefit of labor. So just like that, RERA is for the benefit of real estate buyers, whether it would be home buyers or it would be a commercial property buyers. And I have written the word home buyers here because they are into much difficulty. And why they are into much difficulty? Any idea? Sir told 10% is the penalty, right? Of the project cost. So if, assuming if RERA is aggressive, and for each violation, I think they can range from 5% to 10%. So I don't think so any project will become viable. So if RERA as a regulator becomes too strict or stringent, it will be very difficult to run the business. And that's the case of real estate industry as a whole. And I think sir was telling that you have worked in some 3 real estate companies for real estate company. So I understand that you would be aware it's not that lucrative business which it appears to be, except if you leave the other component. It's very difficult to manage real estate industry. And why it is so? Because it's a bunch of promises and bunch of contractual obligation, both sides. Sometime on the buyer side, sometime on the seller side. And when there are contractual obligations, and as rightly was discussed before this, that whatever promises are not fulfilled, you can go to court, ask for a compensation, you can go to court, ask for an interest, you can ask for a penalty to be levied. In fact, I would give from my experience of RERA, that even if you are not an allottee, you can file a complaint. So RERA is also in the nature of public interest law. So suppose I get across an advertisement where there is no RERA number, I can go and file a complaint in RERA. Nobody stops me. If I am saying anything wrong, Vinay sir, please correct me. Any person. So I am a prospective buyer. So I can also file. So it's more of a PIL now. I'll give you some examples how it happens. But yes, this is how the perspective of RERA law is. And when this IBC law came, and I must first understand from you, do you understand the difference between a code and an act? Because I am going to differentiate between both of them. I am going to discuss Insolvency and Bankruptcy Code vis-a-vis Real Estate Regulation Act. So both are different. Agreed? And I will not let you sleep. So act and code, anybody from the audience? Yes, sir, please. Okay. Can you give me some examples of code? You gave an example, Indian Penal Code. Any other code? National Building Code. Okay. 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 Any other code? Very good. Civil Procedure Code. Criminal Procedure Code. So there are 3 codes basically, if we talk about law. So building code is actually prescribed under an act. So here I am discussing what is law. So almost in 100 years, approximately a century, Parliament thinks that we should come out with a code. You can see the dates, almost in 100 years, 80 years, 100 years. So they come out with some code. And they came out with this code with a specific purpose. And what was that purpose? See, Indian economy was grappling with NPAs. Today also it is grappling, but they have recovered to a lot. So NPAs, we all are aware. And as I gave you the example, if there are huge amount of penalties, huge amount of non-compliances, there would be a default for any business because of X, Y, Z reason. Now, because of any reason, if there is a default, what would bank do? What would bank do? Attachment of the property. They will first declare your account as an NPA. They will issue you a notice. Please make the payment. Then after 60 days, they will send you a possession notice. Then they will come and take physical possession. Then they will auction the property. This is the long and short of what NPA is. Some other day I can go in detail, but that is how it works. Similarly, banks will have a right to sell other properties if it is deficit for the specific charge property. So there could be a mortgage, there could be hypothecation, there could be lien. All these type of securities would be there, which could be liquidated by the bank to get the dues. And whatever is deficit, they will keep on moving ahead. So suppose Kingfisher Airlines, and probably nobody is there from Kingfisher, no? Last time I gave a lecture and I made some comment on Kingfisher. Somebody came from the audience and said, I was the ex-CFO. So I still remember Bangalore. So Kingfisher Airlines, everybody is aware, was not able to do business because of XYZ reasons, whatever were they. Now that company which is not able to make the payment will obviously be a defaulting company, and then recovery proceeding would start. Now the bank will not be able to recover the complete amount. So what they will do? They will come on to the promoters. Correct? And I think sir has already explained what is promoter with regard to a project. But I am now talking in the sense of a businessman. Why would they come on to the promoters? If suppose a business is not doing good, because probably airlines is not doing good, but liquor is doing good. Correct? So there is no problem. As far as businessman is concerned, don't you think so? Am I making sense? So we should vote for Malia ji. See, when the banks are not able to recover the amount from the company's asset, they come onto the promoter. Why? Correct. Who said guarantee? Yes. Okay. So if the promoter has given a guarantee, he has said, I will give my asset in case the company defaults. Correct? Now, this culture that if one business is not doing good, another business is doing good, and because of one defaulting business, my assets are being sold, should be stopped. Don't you think so? Because every business cannot succeed, that is for sure. And I will give you example of Donald Trump. Everybody is aware about Mr. Trump. How many bankruptcies? Any idea? 6. 6 bankruptcies have been faced by Mr. Trump. And he was the last president of US, correct? Immediate president. So being a defaulter in a company or a business does not mean as a businessman I am bad. Because a business may be hit by economic condition, financial condition, XYZ reasons, which are not into my control. And that is the basic objective of this law. Now, why I gave you these all examples of bank? Because first thing a person would default, what would he do? When he will not pay to the bank. When he has no money, even to pay tax department. So first default is always of tax department because they charge monthly or a quarterly basis. So a company, normal non-compliance would be income tax. Now it would be GST. Then it would be bank's default. And then would be other statutory defaults like ESI, PF, employee related default. So this will be a standard default for everybody. Why there was a need for code? Because once account becomes NPA, bank will come, and take possession. So the factory would be shut down on day one. So factory will not be able to run. Now I'm giving you an example of factory. It may be any business. Everything gets stopped once the bank comes in. What would be the consequential effect? The account would be attached by the tax department, saying that I will get the money. And then tax department and bank will start fighting with each other. That I want money, I want money. Correct? This is the standard practice which was happening before this law came. So nobody is going to get any money, or the asset value will deteriorate with the passage of time. So what happened in the case of Kingfisher, or let's say what happened in the case of Jet Airways, when the insolvency triggered or the default was there, default and insolvency took much more time. So maybe for Jet Airways, I can say it took almost 1.5 years. So for that 1.5 years, all aircraft lessors started terminating and taking their asset back to their country. So when you do not have the asset, you can't perform, you can't do business. But you have to make payment to tax department first. You have to make payment to bank first. You cannot say them that I would like to make payment to the aircraft owner, the lessor. So that was the biggest difficulty, that tax department or other departments used to ask for a priority in payment in case of default. And to resolve this issue, this law was thought of. I'll not go into very much detail how this law came, but long and short of this law is that a person who is ailing should be put in the ICU. He should be revived and then he should be brought back to the normal world. That is the main concept. So if you go under IBC, and because now you all have Go First knowledge, so I am going by the example. When Go First has triggered insolvency, no aircraft lessor company can terminate the lease agreements. And they can make payment to the lessors irrespective of payment to bankers or tax department. So the biggest part is that you need not face the regulatory action or litigation against the company to protect the business of the company. The exception is only whatever business you are doing, that should be protected. Now, suppose, let's say this is an example of a telecom company. And if they do not pay the dues to the Department of Telecommunication and they cancel the license, they cancel the spectrum license, then nothing would be left in the company because otherwise there are no assets. So every business, whatever industry it operates, it will have some asset which would be the critical asset. And to protect that asset from other regulators, IBC is one of the solution. And till date, in my experience, it is the best solution. So Income Tax Act, Companies Act, GST Act, or whatsoever act you talk about, code, as rightly said, code is codification of various laws, and this code is having an overriding effect. So when it has an overriding effect, it means what? If there is a conflict between income tax and the code would prevail. So if code allows you to pay to the critical vendors, you can make the payment. Because let's say, take an example of a real estate company. If I do not make the payment to labor, to cement vendor, to steel vendor, I will not be able to do the business. And if the money comes and it is taken by the bank, adjusted against my installment, if the money is taken by the tax department, I will be left high and dry. So this particular law helps you to protect, run the business, revive the business, and then again come back on the feet. It probably could be by the same promoter. It probably could be by a different promoter. And
special statutes, and all this, that takes a
so first of all, IBC is a civil law. It's not a criminal law. So if somebody goes under IBC and revives back, criminal action against the promoter will continue. If they have siphoned off the money, definitely they will have to face the criminal action. But suppose Baba Ramdev has taken Ruchi Soya. So the Ruchi Soya promoters will face the action, not Baba Ramdev, because he is a new promoter. ArcelorMittal, who has bought SR Steel, they will not face any action. Probably SR promoter may face some action if there is any. So the buyer will not face criminal action. That is one. And the best part is, and I would have come to your answer in some few slides back, but the point is, in civil law, further litigation will also not be there. And I will explain you by example how it happens. But in civil law, you will be able to buy the company at a throwaway price. And there are many examples. And in fact, today only I was reading the article in the newspaper. Now Congress is saying that Adani has taken over so many companies under IBC at a throwaway price. So it is, the law is like this. It helps you to bid for a company and at a cheaper price. How? We will see. But the point I was trying to tell you that these all acts, whatever I just few examples I have given, these all will get overridden by code. So there are three terminology which I am going to use: insolvency, liquidation, and bankruptcy. I use the word insolvency and bankruptcy code, correct? So code I have explained. Now there is word insolvency and bankruptcy. So quickly we will understand what is insolvency and bankruptcy. First, from your side, what do you understand for the word insolvency? Okay. What is insolvency? Let us understand. Your liabilities are more than your assets. Any other example? Inability to honor the commitment. So, sir is saying something different from what you are saying. So you are. So let us take an example. I have a Mercedes that don't have money to fill petrol. So am I insolvent or am I solvent? होता है ना ऐसा? रोकड़ा नहीं है. There is no money, but I have assets. Okay. So he is saying it's a liquidity problem. कल को मर्सिडीज बेचो, थोड़ी सस्ती गाड़ी खरीद लो, बचे हुए पैसे से पेट्रोल डाल लो. Am I right? सर हिंदी समझ में तो आती है. हाँ, I am from Ahmedabad, so थोड़ा सा इशू है. So if I have money, then liquidity का angle देखना है. If I have assets, then what sir is saying, and I will explain what insolvency says. But let's say I am Amitabh Bachchan. So I have a brand value. I have a face value. I have a brand value. Have you heard he was insolvent few years back? Before कौन बनेगा करोड़पति? So what was it, sir? Yes. What did he do? Miss World pageant. And then there was some protest. And he could not do it. And he had to take the complete project outside India. Some 500 employees were there. So I will tell you now the CA part of it. What you are told is there in the media. Now what happened was, at that point of time, he had a company called Amitabh Bachchan Corporation Limited, ABCL. They made some good movies also. Major Saab was one of the good movies. But I think Mrityu Data was a flop movie. And this pageant contest was a flop contest. And therefore he was bankrupt or insolvent. I don't know. We are discussing. Now his company wanted to come out, and Canara Bank at that point of time wanted to sell its home. So he was under tremendous pressure. So he went to one of our chartered accountants. What should I do? They said that there is a way out. IBC was not there. So there is a way out. You declare your company as a sick company. Anybody have heard of sick company? I know seniors would have heard of. Youngsters? Sick? What was sick? What sir said. If your liabilities exceed your assets. So there were two parameters when it was sick. So I started my practice from a sick company. So there was a board for industrial financial reconstruction in Delhi. It's called BIFER. To declare a company as sick, we used to give a certificate as a chartered accountant that the net worth is eroded. If it is eroded to the extent of 50%, they will admit it. And if it is 100%, immediately the release would be granted. So that was how it was happening. Now, sick company could only be a company which was under Schedule 2 of IDRA, Industrial Development Regulation Act. So practically manufacturing company. But cinematography was not a industry covered under IDRA. Therefore, Amitabh Bachchan could not take the benefit of sick company. So what to do? So what should our chartered accountant friends suggest? Suggest something. Insolvency was not there, no. We have to declare the company as sick. Parameter of sick is manufacturing, and this company is not into manufacturing. What should I do? Buy a manufacturing unit, no. Buy a manufacturing unit, no. Law does not say how much big manufacturing unit has to be. Correct? So Bachchan Saab was from UP, as you all know. So he bought a leather unit. That time leather units were into losses. So he bought a leather unit. So company was into manufacturing by definition. Loss already was there. It was already NPA. And then they got the registration of sick company. So perfect planning. Now, this planning everybody can't do. So this was an improvised version what we have IBC today. So IBC does not categorize between industry, does not categorize what type of a company you are, whether you are listed, unlisted, private, public, any company under Companies Act. If they fail on a obligation to pay, would be insolvent. Clear? Any obligation to pay, if I am not able to fulfill, I am insolvent as far as IBC is concerned. Now, if I am not able to pay, let's say my employee, am I insolvent? If a company is not able to pay its employees, is it insolvent? Yes, it's a debt obligation. If a company is not able to pay its chartered accountant for the audit fee, it's insolvent. So when this law came in 2016, the second case to be admitted in India was for audit fee of a chartered accountant. We chartered accountants are always aggressive. That time the limit was 1 lakh and now the limit is 1 crore. So my logic of saying all this is, if a company is not able to meet debt obligation, it is insolvent, and the status of the company's insolvency. So if they are not able to pay, they are technically insolvent. The state is insolvent. And the process, we will understand insolvency. Clear? Now, if, yeah, I will come on to who can file, what can file. I'm just discussing terminology. Second is liquidation. If nobody comes to buy this company when this company is trying to recover, if ArcelorMittal does not come for SR Steel, or Babaji does not come for Ruchi Soya, or let's say Jet Airways, Kalrock does not come, any company like Reliance does not come for Syntex, then that company would go into liquidation. Now, I think Lenco, you must have heard, it's into liquidation. So what is liquidation? Liquidation is selling off your assets. So as Sir has said, liabilities are exceeding the asset. So that is one of the parameter to see. If there are all the assets become zero, company is completely liquidated. So liquidation is the process of selling the assets of the company. Clear? Now, when the assets of the companies are sold, then the company is fit for dissolution. So there are 3 stages of a company or an LLP. One is insolvency. Second is liquidation. If insolvency fails, in liquidation all assets are sold, then it is dissolution. Clear? We will apply all these stages in real estate company. I'm just giving you a brief background because all of you are not aware about IBC. If it is an individual, in India, we use the word insolvency, same stage, but not liquidation for individual. We use the word bankruptcy. and then that person is discharged. So these are the three terminology, same thing, name different. Clear? Okay. I already told you this, Mr. Trump, all 6 bankruptcy. Why I gave you this example was that in India, we were not able to recover from many NPAs, and many good entrepreneurs were not able to do other businesses. So if they have failed in one business, they got stuck up, and the other businesses also started suffering. So this particular IBC is somewhat inspired from Chapter 11 bankruptcy. So what is Chapter 11 bankruptcy? If you are not able to do a business, declare your business as bankrupt. Why I am using the word bankrupt is because in US, in UK, they use the word bankruptcy. In India, for companies, we use the word insolvency. And in India, we use the word bankruptcy for individual. There, for companies also, they use the word bankruptcy. So this is very important, because when you are talking to a US or a UK client, you have to know what is their terminology. So this is the example what sir was referring to. So see, if I have a good land bank, and now we are on to real estate. If we have a good land bank, we have a building, and we have taken a loan, and suppose the corona hits, we will not be able to pay the loan. The same situation, I am having a Mercedes but not having petrol to run the Mercedes. I cannot say to the bank, you sell my land bank, correct? Because that's my business, and the land value is almost twice of the loan. So such type of a situation was actually grappling, and there was no solution. Because if bank takes a coercive steps and tries to sell it, promoter will go to the court and say, see sir, twice is the value of the asset. And courts will easily give a stay. Because courts also understand, why are you killing the business? But in this process, suppose this is a hotel, and bank comes there and takes the possession. What will happen? Nobody will stay in your hotel, correct? Because the people are staying there and they put a lock. Nobody will come. Similarly, if suppose this is a real estate company, complete construction halted. Once there is a default, halted. So this problem was there. Now what insolvency says, if there is a default, you take the company into insolvency because you are now qualified to be insolvent. But that default amount is now 1 crore and above. So that is very important, that the financial health of the company should not only be seen by assets and liabilities, but also by their competence to make the payment to debt obligation. Clear? Let us take another example. And this is for you all who have clients whose litigation do not appear in the balance sheet. You see the balance sheet is a perfectly healthy balance sheet. Assets are there, liabilities is there, and assets are much more than the liabilities. But there is a notes on account, a off balance sheet item, a contingent liability, which if tomorrow gets crystallized by a court order, will come and hit your balance sheet. Possible? Sir, I think sir was giving some example of NGT penalty, some other penalty, maybe SEBI penalty, maybe Competition Commission of India's penalty. DLF got some 650 crore penalty in CCI case. So such type of penalties which sit here, it could be tax dues. Sometimes it happens we litigate tax dues on the basis that there is some judgment of a high court and we litigate. But that judgment gets reversed by Supreme Court against the SSC. And we are aware that now our litigation will also go. In that case, if you are required to make the payment, your balance sheet would be negative. So then the business is not sustainable. This is also a good case for insolvency. So I hope you all are with me. I am discussing what all cases you can think of taking the company into insolvency. So this is a test which I am trying to demonstrate. And why so? Because of this one line only. Section 238. Only one line, and this makes this complete law much more powerful than any other law in India. What does it say? It has an overriding effect on any other law. notwithstanding any law, non-obstinate clause, and suppose RERA says you have to make the payment of penalties to suppose 50 buyers, and I have to deliver home to 50 buyers. So 50 I have to pay penalty, 50 are still standing. If I pay penalty, I cannot complete it and give it to you. Now in this situation, what is better? Take the company into IBC, get it cleaned. Just like we do bleaching, we do dry cleaning. This is dry cleaning of the company. How? Somebody would ask me how. I'll just show you one waterfall. This waterfall is on your screen. Blue color is the waterfall. And insolvency professionals would already know. But for others, what is waterfall? Waterfall is what money I am going to get if I sell the company. Assuming that I liquidate the company. So suppose I have taken a loan with interest which is now accumulating to 1,000 rupees. And my asset value is now, as on today, is 600 rupees. So that 400 is the deficit. Now, whether that 400 will be achievable by anybody, will anybody get that 400? Answer is no. Even though company has an obligation of 1,000 rupees, but the asset value is only 600. So this is a perfect case of insolvency. 400 will not come to anybody, but how that 600 will be distributed? So this is the waterfall in which that 600 will be distributed. So this is the priority of waterfall, which says if the water is left in the first column, then it will go to second, then it will go to third, then it will go to fourth. So coming on to our example of 600. First thing is insolvency process cost. Who is this insolvency process cost? Because the insolvency process runs for a period of 180 days. So if today the insolvency is declared by NCLT, so today now only companies are covered, company and LLPs are covered. Probably in a year, we will see partnership firms also covered. So if the company is under insolvency, that 600 will be distributed in this fashion, but the first process period cost, that is the first cost would be of insolvency professional. We as a chartered accountant will have first, right? No, we are going to take the distressed company. So our salary has to be there, no? So it's a remuneration of IP, which is going to be there. 6 months process cost. So let's say for 6 months, if somebody runs the company, so let's say somebody is going to run the company, let's say Go First is going to be run for 6 months. So their petrol cost will be process cost. Their employee cost will be process cost. Their electricity will be CIRP cost, process cost. Anything for 6 months to run the company is process cost. Clear? Now, just skip liquidation cost because we will talk about that later. Another payment would be done to workers. In India, we have a welfare state. So we always think about workers. So workers will get 24 months payment. Whatever is due, 24 months they will get. And secured creditor. Now, who is secured creditor here? All the bankers. All the bankers are mostly secured. If those bankers are unsecured, they will come somewhere down. So bankers are getting, workers are getting. So let's say I have 600 and I have spent, let's say, 50 rupees on first level. And here, suppose I have spent 300. So how much gone? 350 gone, 250 left. Now from 250, I have to pay to employees. Let's say 50 gone here. I am left with 200. Now suppose unsecured creditor are 300. What they will get? 200. 100, nobody will get. Whether the persons below this level will get anything? No. So who are here? So government dues are here. Central government, state government, local authority. You are seeing the word crown debts. So crown debts is nothing but the dues to central government, state government, local authority. It could be income tax. It could be service tax. It could be any municipal tax. It could be GST, state GST, center GST. Everything comes here. So everything is gone, written off. So the person who is going to buy this company, how much he has to pay? So if you are bankers and you have to take a decision, because decision is with the financial creditors. So they will have to decide, we have to make the company sold. Now sell the company at 600 or maybe 610 or maybe 620. And sometimes it could be 590 also. Whatever is the negotiation. But somewhere around 600 they will sell. For that 400, nobody will get anything. And the person who is going to buy, whether he has to pay that 400? No. So your problem resolved? Happy? Out from the distress? This is the objective of IBC. सब पाप धुल गए.
This order has to be given to the authority for closing.
No, now there are judgments already of Supreme Court. You want to read the judgment? The citation is Ghanshyam Mishra versus Edelweiss ARC. Supreme Court judgment, very famous judgment, only 150 pages. It talks about everything. Mining department dues, income tax dues, sales tax dues, all dues. First, they have to pay that 600. In our example, they have to pay 600. Thereafter, they can do anything. First, you have to pay that 600 as the committed amount. If somebody pays 500 and defaults, again the company goes into liquidation. Now no insolvency. Now direct liquidation. Clear? What will happen to that 500? That will go to the stakeholders. Gone. They have already taken it. So no refund. Any other doubt? Yes, sir, please. So PF dues is what, sir? Provident fund or pension fund? Provident fund, employer contribution, employee contribution. Both have different treatments, sir. I can go on with the judgments and all, but we don't have time. But just to answer your query, if the company has collected your dues and not deposited with the government, that government dues will have the first right because they are somebody else's dues wrongfully kept with the company. But suppose any other due, like any retirement benefit due, bonus due, gratuity due, leave encashment due, for which company had to provide for and has not provided for, then nothing can't be done because they are all other creditors. Now there are various judgments on each aspect. I can go on to add, but we don't have time. Someday if branch will call, I will definitely deliberate on it. But as of now, we will then digress from the topic. In this, do you have any query? So I am, for the time being, I am using this word secured creditor for your general understanding that somebody who has a security. Now, it could be in the form of mortgage. It could be in the form of hypothecation. It could be lien. So normally banks do it. Hypothecation of stock, lien on something, FD and everything, mortgage on the land. So everything will come in this secured creditor. So normally it is some financial creditor who has a security. I have not come across a case, and IPs would ignore that. I have not come across a case where an operational creditor becomes a secured. Like we chartered accountants are operational creditors. We never ask fee in advance. Am I right? And we don't say the client that you give a security, only then I will do your work. Am I right? So the hard reality is nobody would get. Correct. So these three people can trigger insolvency: operational creditor, financial creditor, and company itself. So company itself, you all are aware, go first. Aircel, many companies have gone suo motu nowadays. Anil Ambani has also gone. And disclaimer, one of the company, I am only the advocate. And operational and financial. Now, who are operational? So I gave you the example of employees. Now the limit is 1 crore. So if all the employees get together and their dues are more than 1 crore, they can file insolvency petition. Clear? All the workers dues more than 1 crore can file insolvency petition. But suppose I am chartered accountant, suppose you are company secretary, suppose you are cost accountant, suppose you are advocate, and overall our fee is more than 1 crore. Can we all join hands and file insolvency? Answer is no. Joint petition is only permitted in case you are employee or worker. Otherwise not permitted. Each one has to satisfy the 1 crore limit. Clear, sir? Now, whether if I have bought a property, so technically in search terms, I am an allottee. If I am an allottee, whether I am an operational creditor or financial creditor, I will come on to that question. But you just think about it. Who are financial creditors? Who have given money to the company, like banks, like NBFCs, like private lenders, so intercorporate deposits. So all those are financial creditors. Broadly speaking, somebody who has financed the company. So suppose I have done a discounting, financial creditor. So suppose there is a demat account, some funding is done. Those are financial creditors. So all those persons who have given money and there is a time value of money associated, it's financial creditor. Otherwise, it's operational creditor. Now you see the definition of operational creditor, nothing more to say. Somebody who has supplied goods, somebody who has supplied service. Clear? So goods, you are aware, all the vendors. Services, you are aware, all the professionals. Third part you see, very important. And I think it is not started till now in your state, but probably it will start because it has started in Maharashtra and Gujarat. Are you seeing what the third part is? Government dues. Correct? So it could be income tax, GST. If the company has not paid, the department is going to take us under insolvency. If you have not filed the appeal. If the demand is crystallized and confirmed, then they are going for insolvency. It has already started in the Maharashtra and Gujarat. Even I have recently handled one case of Bhopal where Bhopal Municipal Authority filed for insolvency for their municipal tax against a mall which was more than 1 crore. That's the option, no? Even the employees and the workers have the right under labor law, no? So IBC is an additional and a quick remedy. It does not prohibit your other remedies. And I will come on to it. If you are less than 1 crore, you can go to that remedy only, no? IBC will never come to the rescue. So ultimately, the object of IBC is that if some creditor goes and file insolvency, I have to argue on two matters in the court. One is that that particular creditor is bogus and he has not supplied goods or service, or there is some issue. Say some dispute with regard to quality of goods or deficiency in service. Or I have to justify that I am a 1,000 crore company, this person is only 1 crore and there is a dispute and I can very well run. He can go to the, as sir said, another law, another court. So that argument is also permitted. And that's what the Vidarbha Industry Supreme Court judgment says. More or less the same thing. So I'll not go on to the technicalities. What I wanted to tell you was these creditors. Now you see, once the company is under insolvency, such type of a publication comes in the newspaper. All the creditors are required to file the claim. Okay, there is a timeline. You have to file the claim and within 30 days, the insolvency professional will have to call a committee of creditors meeting, COC. And that COC will have only financial creditors and not the operational creditors. Clear? Now let us come to our main question, whether an allottee is an operational creditor or a financial creditor. Please don't read the red part. Please don't read it. Everybody is reading. So you just skip the red part and just see the black part. it talks about when a person can be a financial creditor. So I gave you the example of time value of money, discounting, so bills discounting, then dematerialized accounts are being funded, that is there. Any amount of liability in respect of, you see, lease or hire purchase. So if it is a financial lease, it will fall here. So all these are very easy. The difficulty is clause number F. Any amount raised under any transaction having the commercial effect of borrowing. You please mark the words commercial effect of borrowing. Only 3 words, commercial effect of borrowing. Now, please don't read this red part and let us understand what happened. So that red part was not there. So just for the timing, forget it. Nobody has read it, no? Everybody has read it. So if you simpliciter understand operational creditor and financial creditor, in 2017, when this law came, one of the home buyer filed a case in the court saying that, sir, they have not given me assured return. You know, there few years back, there were, if we do not deliver you, we will pay you this much. Or delay is there, we will pay you this much. Or you will get an assured lease rental of this much. Some different, all types of schemes were there. And good companies were doing it. So for that assured return agreement, one gentleman went to the court and court said whether it is operational or financial. Because operational means you must have given some goods or services. Financial means you must have funded the company. Now you are saying you gave some money under some arrangement, you were to get something back, whether this is finance or not. So court was totally confused. And therefore the judgment came that this person is neither operational nor financial. It is something else which we also don't know. And that happened in 2017. Because the law said creditor, then law defined financial creditor, then law defined operational creditor. But law did not define anything other than operational and financial. So there was no third limb, but there was something which was other than these two. That was the understanding of the courts that time with respect to real estate transaction. And the regulator. So every this law has a regulator, like we have SEBI, we have RBI. So in this case, it is Insolvency and Bankruptcy Board of India. They also, at that time, when the view was taken that it is not operational financial, they also introduced a new form for claims, Form F, saying that if your claim is not operational or financial, it will be other creditors. I also don't know, but they introduced the Form F. And I am talking about 2017. There, this matter went to Supreme Court. The biggest case of real estate in India till date is of JP Infratech. And in that matter, the judgment name is Chitra Sharma versus Union of India, wherein it was challenged that we are not other creditors, we are financial creditors because we have given money and it is a commercial effect of borrowing. So now let us come back to the definition. And this explanation got introduced after that Supreme Court marathon hearing, litigation, sitting of insolvency committee, then proposing an amendment, and by way of an ordinance on 6th June 2018, this amendment was brought. So for 2017 till 2018, it was struggling whether to be qualified under OC or FC, na ghar ke na ghat ke, and then it became FC. Now, what the definition of FC says for commercial effect of borrowing. Now, Vinay sir has already explained you what is allotee and what is real estate project. So I need not explain. If you are an allotee, you are a financial creditor. Clear? Any doubts? Now, in the state of, and I think he also referred and Suhail bhai referred that in some states, RERA is not implemented. Correct? So a case came to us in the state of West Bengal. So West Bengal, we all know, Mamta Didi did not implement the RERA law. And when RERA came, they came out with their own law called West Bengal HIRA, HIRA, housing something. So that law was made And suppose I think we have some 100 odd sections in RERA, so it has some 30 sections. Very simple law. They made their own law and they said we will not follow RERA. The matter went up to Supreme Court, and last year Supreme Court and last to last year Supreme Court struck down that law and said that when center has made a law, you cannot enact a parallel law and you have to follow the central law. And that's how now they have also from Feb they have implemented West Bengal RERA authority also they have created. So the states where the RERA law is not there, or the projects which are not covered under RERA, in that case, there is a very big trouble to come under the definition of financial creditors. In that case, you will have to justify to the court how you are a financial creditor, even when the RERA is absent. So this is one of the biggest challenge. You have to move an application before the court to justify that you are a financial creditor based on the parameters, like we will have a agreement to sell or sale deed or whatever documents we have. So this is one of the point that the financial creditor definition now includes the LOT. Clear? Now, the object of that litigation was to include home buyer, but they included LOT, thereby meaning even the commercial property buyers are included. So if I have bought a shop in a mall, then also I am an LOT for the purpose of IBC as well as RERA. Clear? So this is the point which I wanted to make, that if you have bought a property, you can take the company into insolvency subject to. Now, what is the subject to? 1 crore limit. And the second more limit, which real estate developers, builders, association represented, and government came out with an amendment to the law, which says 10% of allottees should be together. 10% of the allottees or 100, whichever is lower, should also come together. Only then petition would be maintainable to take the company into insolvency. Yes, please. Amount is together only, but minimum number of persons should be 10% of allotment. And why this amendment was brought, and it was challenged in Supreme Court and it was confirmed by Supreme Court. Amendment was brought because what was happening, I have 10 projects. 8 projects are doing wonderful. 2 projects, there is some issue. It could be issue by the local authority. It could be issue of that particular state. I don't know. But because of those home buyers of 2 projects, complete 10 projects were going under IBC. Because IBC goes company-wise, not project-wise. Am I making sense? Company goes under insolvency and not the project. So those all 10 projects were going under insolvency. So to stop this, they said that minimum there should be a threshold of allottees.
So the association of these allottees. So then who gets?
I will come on to the committee of creditors. Now what happens, how it is made. So they ask for claims, you give their claims. Till 14th day, he will put a cutoff, collate claims and say this is FC and this is OC. Financial creditors, operational creditors. In this financial creditors, normally it is very easy. He just have to see the balance sheet. All the bankers are financial creditors. If it is a real estate company, all the allottees are creditors.
Who's going to file the claim?
Now see, balance sheet has to be the basis. Now, if it is a real estate company, I will also see the RERA forms, the list of allottees. Sometimes it might happen that they have not informed RERA and done some agreement, and somebody comes as a claimant, then you will have to see the documents and confirm their claim. So I'll come on to the judgment what has happened. But yes, whoever is a claimant, if he is justifiable and corroborative evidence is there for balance sheet, for books of accounts, then you have to admit their claim as a financial creditors. Now some of the points. What all documents would be required to be seen? So if you are giving advice to home buyers or maybe commercial property buyers, these all documents would be required to be submitted with the claim form. Claim form is form C. There are different forms, form B, C, D, E, F. for each class. Employees have different, workers have different, other creditors have different. So for financial creditors, normally these documents are there: agreement for sale, allotment letter, whatever payment you have done, or something which says that they have defaulted. So suppose they are not giving you possession, so you have written to them number of times. So all those communication will become evidence. You have filed a case in RERA. There is an order. This will also come here. Now the question comes, suppose in the agreement there is no interest and there is a default and there has to be some interest. So if the agreement does not provide interest, IBC law provides 8%. 8% interest. If there is no contractual understanding, if your contractual understanding is 15%, okay. Otherwise, 8% interest. Now, what happened? This particular case, JP Infra, 25,000 crores was taken from home buyers and 7,500 crores was taken from bankers, IDBI, SBI, Union Bank, all those banks, different banks. I think around 50 or 60 COC members were there, only bankers. And other than these, home buyers were there. Now see, I am talking about this case, pre-amendment, post-amendment. We all are understanding bankers. You have paid 7,500 crores. 25,000 crores is paid by home buyers and they are standing outside the room. Kindly understand the impact of this law. Those people who have put in money, they were not part of decision making. Now let us bring the amendment and they become part of the COC. Now can they come inside? So 25,000 crores, if they come inside, forget about decision. They will start killing the promoters. So this COC will have suspended board of directors. Who are suspended board of directors? Who are the board of directors before insolvency? Their powers are suspended as soon as the insolvency starts. Insolvency professional, who could be a chartered accountant like us, would be the chairperson of this committee because he is going to conduct the meeting. And on the right hand side, let's say there are board of directors who are suspended. Left hand side, there are COC members who are financial creditors. Now the difficulty came how to bring all those people inside the decision-making room. Therefore, they brought about this concept of authorized representative. And this authorized representative has to be suggested by the IP, who is the insolvency professional of the company. So let's say we are talking about JP Infra. So he's the insolvency professional. For people standing out, he will suggest 3 names and give to them by way of publication. And they all will have a right to vote on it. And whatever is the favorable vote, that person will be selected. Now, for passing any resolution in insolvency, there has to be a vote of 66%. So 66% is the voting rights of the COC. Whatever COC by way of 66% will decide will be done. So if they want to sell the company to a person having 600 rupees for the value of the asset 600, it will be sold. Suppose they are wanting to sell the company at 550, even though valuation is 600, but 66% decides it will be sold.
This case, 7,000 crores is bankers. Giving 1 crore for customer is 25,000. 25 plus 7,500, 32,500 crores. Assuming that, so 32,500 crores, 66% is what we are talking. So if the financial creditors, lenders are on one side, wanting to support somebody for a bidding, whereas this buyers 25,000 crores, assumes decide to develop it themselves. So that will supersede the.
Correct. सर जो वोट्स की राजनीति है, जिसके पास मेजॉरिटी है वो ले जाएगा. शिवसेना केस, मेजॉरिटी शुड बी विद यू. अभी तक ऐसा कोई केस नहीं है. There is no such case till now where minority's argument is accepted by the court, because the rule of majority will prevail, howsoever bad that may be. So we have these all remedies, and this is the last but the biggest remedy. So you have civil, consumer, RERA everywhere. You can always go and approach there. But if you think on a company level, for the promoter, IBC would be a better option, broadly speaking. This is broadly the timeline. 180 days is the ideal timeline. You can get an extension from NCLT for further 90 days. It can increase to 270 days. Then, if suppose there is some litigation, then it can also be extended to 330 days. So broadly speaking, 1 year. So 1 year, the normal procedure can be there. And thereafter, in exceptional circumstances, court has always the power to extend the timeline. In fact, in JP Infra, first time nobody came. Second time government owned NBCC came, and then it was challenged by some of the home buyers, and ultimately now it is with Suraksha ARC. So that's some related group of Adani, I think. So they have taken it over. So it will happen once the value is maximized, new buyers might come, and there will be always a tussle between highest bidder, second bidder, third bidder. Always it will be there. Coming on to your question. This is your question. So first, RERA and IBC, if both of them contradict, what will override? So let's say the IBC says 66% of the financial creditors, but your RERA says you have to have 2/3 of the allottees to decide who would be the promoter. Am I right? Correct? So if that RERA says something and IBC says something, who will override? If you say something and your wife says something, who will override? So that's why only IBC will override. Now, your question. If there is a landowner and there is a developer, they have entered into a joint venture agreement and they are sharing probably the profits, probably the flats, probably from the sales consideration. Whatever may be the sharing, if they are into an agreement and they have taken the money and sharing it, for the allottee, it is one and the same. So if that goes into insolvency, it will be taken as a single unit only. That landowner will become a creditor for the company. So it has been now consistently held in 2 cases. This one is my own argued case. So he must have given consent, no? Then only he will accept money. Suppose he is developer, you are landowner, I am the home buyer. If I am buying, I must be aware, no, you have given him power, then only he will take money on your land. You must have entered into some agreement, some joint development agreement, some profit sharing agreement. There could be multiple permutation combination. But for me, if this is a company, it has to be resolved, including this asset. You cannot go away with your asset and say, let him die. And 99% what happens is, landowner person is only the director in this company. 99% cases. But yes, there could be cases where there are different, but this is the view taken by the court. If you want to go for insolvency, so you have to pass a special resolution in shareholders meeting. Special resolution, 75%. Now, if there is I told you assured return or buyback, these all terminologies are included in the definition of financial creditor based on the agreement clauses. So we cannot give a direct justification whether they will be financial creditor or other creditors. There could be some possibility because I have seen barter transaction also. Sometimes you are doing the whole, let's say, plumbing work, and in lieu of that, one flat is given to you. So that could be a barter transaction. So in that transaction, we will have to see which component is getting triggered, whether it will be converted into financial creditor or operational creditor. So that issue will have to be seen. So there are differing judgments. So I will not go into very much detail. Courts have taken very lenient view. Law is after 90 days, no claims to be accepted. But if somebody has genuine claims, books of accounts are there, courts are permitting the claim even till the approval of resolution plan. And recently court has said, even if you have approved the resolution plan, but there was something in the books of accounts and they had not filed their claim, maybe because of ignorance, then also their right should not be taken away. So this is a recent judgment of Puneet Kaur versus KV developers, where courts have taken a lenient view, and therefore now I am also advising all the insolvency professional, when they are taking care of a company, if you are getting any document, let's say agreement to sell or sale deed or some payment, but some claim is not coming, at least disclose it so that the person who is buying is aware. He must not say that this liability is extra. Because if after approval of plan, some new liability comes, which was there in books, the purchaser will say, I will not pay anything. So that payment will have to be done from the creditors who have taken the money. That 600, whoever have distributed. So 600 is distributed to in respect of 1000 rupees. Now suppose that 1000 claim increases to 1200. So now 600 will be divided amongst 1200. So that proportionality will be maintained. Now these are 2-3 recent things which has happened. One of the case which is based in Gurgaon, that's this Flat Buyer Association Winter Hills case, wherein there were, let's say, 3 projects, and there was a problem in one project and insolvency got triggered. They went to court, said that I will be able to complete this project. Please do not put the complete company into insolvency. So by court order, only one project was put under insolvency. So that is a possible case where one particular project by court order can be taken for insolvency. Reverse. Let's say there are 8 projects, 2 projects can be completed, they are near completion. 6 cannot be completed, 2 can be completed, and for those 2, all the flat buyers get together, make an association and go before the court. We want to pull out our project outside IBC and we will complete it. It is possible now. Only by court order, not simpliciter. Only court permits, then it can be done. So you can exclude a project, you can include a project. Clear? These 2 are new things. And third, and the recent amendment which has come is, suppose I am not able to sell the company as a whole in insolvency. What should I do? I can sell the healthy projects. So previously the view was only company can be sold as a whole. Now the projects can be sold divided from the total corporate debtors assets during the process of resolution. So this is a recent amendment where they have permitted. Detailed guidelines are not there, how it will be done. So again, I think on a case-to-case basis, they will have to take approval from the court. But they have permitted it in the CIRP regulations now. This I have already discussed. And why IBC is better? So some of the examples of JP Infra, the moment insolvency got triggered. And I tell you, we have also got orders, and I can tell you 3 orders. Immediately passports of the promoters are to be deposited with the court. If there is an apprehension, they are going to run away from the court, ask them to deposit passport, courts are directing. So this is very important, that there was a travel ban immediately. Then what had done in this JP Infra case, and I suggest you all read this judgment. There is a very good judgment where on the basis of a chartered accountant's forensic audit report, 858 acres of land was reversed from JP Associates to JP Infra. What they had done was, with a malafide intention that JP Infra do not have money to repay, but they have an asset. Why not mortgage this asset and get loan in the JP Associates? They transferred 858 acres of land from JP Infra to JP Associates. Both are listed companies. On the basis of forensic audit report, wherein forensic auditor was of the opinion this is a fraudulent transaction. So these are 4 types of transaction. So there is a forensic audit done during insolvency. There are 4 types of transaction: preferential, undervalued, fraudulent, and extortionate credit. If any category is triggered, NCLT will order the promoters to return back the money. Also the related party to return the money. And if there is a third party, they can give directions to third party also. So the forensic auditor said it's a fraudulent transaction, 858 acres of land. Supreme Court said it's not fraudulent because it is disclosed to the bankers, they have given funding, but it is preferential. So on the basis of preferential transaction, it was reversed. So 858 acres of land, you can understand NCR region, Gulf area was reversed. And therefore this JP Infra has got resolved. So those promoters who think we can siphon off the assets, we can take money and go outside India, all these things are now curbed after IBC. This transactions, we call it PUFE, P-U-F-E, PUFE transaction. The time period is 2 years and 1 year for related party and unrelated party. This I already told you. You can read this judgment. It's a very famous judgment. The judgment name is Anuj Jain, Resolution Professional of JP Infratech Limited. Very famous judgment of Supreme Court. Now, I think I am about to 3:29, no? 3:30 is my time. So this is an example how the persons who are going to buy the company, if they themselves are defaulters, they cannot buy the company. So if I am an NPA, I cannot buy another NPA. So if I am a defaulter, I cannot buy a defaulting company. So you can see on the screen, there were two bidders of SR Steel. One was New Metal Company and one was LN Mittal Group Company, ArcelorMittal. So that LN Mittal had two Indian companies through series of group holding, cross holding and all. Two companies in India, KSS Petro and Uttam Galva, they both were NPA. So according to the definition of disqualified bidders, section 29 capital A, if somebody is disqualified, he cannot bid. So because of these two related parties, he was not allowed to take over the SR Steel. But Supreme Court gave them 2 weeks time. If you clear the dues, we will allow you. And just to buy the company, they paid only 7,000 crore rupees to clear the dues of these two companies. Only 7,000 crores. New Metal, which ultimately was traced back to promoters. It got connected to some promoters of this company. They were disqualified. So both of them were disqualified and both of them were given 2 weeks time. Clear? Another example. See again, if somebody is from this family of these people, please don't file defamation against me. This is not my picture. It is published in The Wire. You can see there. So I am not going to explain you. You can understand by seeing what is this disqualified people. Why? Because of relationship of probably blood or marriage. Clear? All are defaulting. 1, 2, 3. All are disqualified, no? Now you see why Babaji was able to take over and why Adani Wilmar could not take over. So there are many examples like this, but because time doesn't permit, I will have to stop it here. Any queries I'd love to take. It's already 3:32. Yes, any queries, any doubts? I'll be sharing my PPT. My number and mail ID is there. If you have any doubts, you can get in touch. Yes, please.
The order has been given like 3 years ago. So still the allotment is not given.
Execution also you have filed.
Things done, but the allotment is not given. So what is the next?
So I was just discussing in the morning with Suhail Bhai and sir that here execution is not so aggressively taken. In Gujarat, first case of arrest was done by us only in execution. So we got the arrest warrant issued, and in another case, the promoters were arrested and kept at the reception of RERA only because there is no civil jail there. It's getting recorded. So I will not tell much more what happened.